Hello, everyone. Tim Davis coming to you guys with a market review here. Been a little tired of myself, a little busy. Got some things going on in the family that needed my immediate attention. I wanted to do a quick video here real quick. And I'm going to start off by looking at the NASDAQ futures. NASDAQ futures. Today is Thursday, May the 16th, 2024. And I want to point out that even though we're seeing a nice rally within the market over the past couple of weeks, it pretty much made a round trip. So now we got to see what the market's going to decide to do next. Round trip meaning we're right back at a level that we've seen in most of the markets several weeks ago. So looking at the NASDAQ futures, we had a prior to this stretch of green, we had a stretch of red. This is a weekly chart. Looking at the weekly chart, folks. So we had a stretch of 4 red weeks in a row, and then we got 4 gray weeks in a row, only back up to a level that we've seen before. So could this be a possible double top? We're going to find out soon. One thing I'll note is that on the way down before price action was rising. I mean, the volume was rising. Then on the way down, on the way up, volume is descending. So could that be a sign that we are about to see another reversal with price action? I mean, with the market coming down and volume going up, that's a possibility. So we could be at what's called a double top. That is very strong possibility that we could be at a double top. By looking at this weekly chart. So that's something to pay close attention to as we start to trade the rest of this week. That we could start to see reversal in the market and head back down. Let's look at the futures, so weekly futures chart of the NASDAQ. Let's switch over to a weekly futures chart of the S&P. And with the S&P, we'll see similar action. Right back up to an area that we've seen several weeks ago. So could this be a double top? That is a huge possibility. So pay close attention to how price action trades these next today and tomorrow. Because if we don't get a breakout of this area, we don't get a huge breakout and continuation of the bulls, we could start to see a strong reversal. So that's something to pay close attention to over the this rest of this week and the next coming weeks. Let's look at the S&P futures. Take a look at the Dow Jones futures. Same scenario. Right back at a level that we have not, that we've seen before. So could this be a double top? That is a huge possibility. Look at the TTM squeeze. Even though we see a lot of price action going up, TTM squeeze, the momentum has been fading. So could we be in a process about to see a reversal in the market? I believe that is a huge possibility. Not only to mention that, but take a look at the VIX futures. Look how oversold the VIX futures are on the weekly chart. Oversold back below 13 bucks first, and folks, back below 13 on the VIX futures. Last time we got this low, which was around back below 12, it stabilized and found a way up, and then we're right back around that level again. So could this be a double bottom, close to double bottom? That's a possibility. Look at the oscillators and the full stochastics, Williams percentage, and CCI. Is it about to turn back up? That is a huge possibility. It's a huge possibility. So the VIX could be on a pattern to turn back up, and the markets could be on a pattern to turn back down. Take a look at the Russell real quick. Russell futures. Same scenario. And the Russell right back at a level right back in an area that it was before. Stretches of red, then stretches of green. Could this be a double top? That is a huge possibility. So the rest of this week, Thursday, today and tomorrow, is going to be very interesting. If we don't get a huge breakout here and we stall here, the markets could be in store for some reversal weeks. So let's look at the major indexes as far as the futures goes. Since the market is not open, I wanted to show you guys futures. What the futures are showing us. This could more than likely just reciprocate to the overall market once the market is open. Now let's take a look at a tool that you guys know I follow all the time. Which shows the percentage of S&P 500 companies trading above their 200-day moving average. And if you look at that too, it's also back at an area that it's been before. And every time so far since we got it, when we got it up to around this level, we tend to we over the past let's say the past year, we tend to find some type of reason to reverse. So could we be in store for another reversal? That's a huge possibility. Right now, the percentage is close to 80%. 80% is where we have found reversals before over the past year. Every time we get around that 80% level, we found a way to reverse. So 80%, close to 80% of stocks trading above that 200-day moving average, we could be in store for a reversal from that point. All right, let's look at the SPX 200R. Now let's switch these commodities, because these commodities, if you have not been paying attention, have been on fire. Let's look at copper first. Copper has hit a level that it has not seen in God knows how long. Let's look at copper monthly chart. So copper has hit an all-time high level. Yep, it sure did. Got above $5, 5.12, and it's starting to fade here just a little. I think the commodities have some room to run. Now that copper has made it up to this level, we could start to see some stall here on copper. One that I really have my eye on is silver, folks, because silver, out of gold, silver, and copper, I think silver has the most upside potential at this point, because it's still nowhere near its all-time high. And I do think all these commodities are going to end up hitting those all-time highs. Silver's all-time high was back here around 49, almost $50 back in 2011. So could silver be heading that way over this next sometime this year? That's a possibility. And right now, silver is approaching an area where it could see some type of stall possible, because we hit this level before and we traded back. So that was around about $30. So we're back to this $30 level again. Do we finally break out of this $30 level? That's what I'll be eyeing silver for the next week or two. Are we finally going to get a break above this $30 level and start to trend and head towards that $49 level? That is a huge possibility. So I do think silver is a good place to settle and just pay attention and be ready for a possible breakout of this $30 level. I think it's going to happen this time. So I do think we're going to end up breaking this level sometime this year, and hold above that level. That's the thing. Breaking above 30 and holding above 30. I think that can happen this year. That's a look at the silver monthly chart. Look at the silver weekly chart. Looks like we are possibly getting ready to break out of this level in a major way. So could see some stalls, some pullback here, but I think eventually we're going to break above this $30 level and hold above it. That is silver and copper. Let's take a look at gold real quick. Gold is still inching higher, and it is already at all-time highs. with possibly more room to run. So we have to see how that pans out. We're in the overbought territory. Look at the monthly charts. But could we stay there for a while? That is a huge possibility. It's a weekly chart. As you can see, we are back at a level that we seen before or a couple weeks ago. So just like the overall markets, gold could start to stall here, possible, and reverse, or it could just stall right here before going higher again. And one more we'll take a look at is crude oil. Because crude oil, folks, I think is at a level where it could bounce. Here's a weekly chart of crude. And one thing I'll point out on crude is that it has pretty much made a round trip back to the 200-day moving average. Last time we got around this 200-day moving average back here in the beginning of 2024, you see it pretty much consolidated before riding this 20 per moving average. I mean, it's 200-day. This is a 200-day moving average. Before it started riding the 200-day moving average higher. And where are we back to now? Right back to this 200-day moving average again. So could we be about to see a possible sustainable bounce in crude? That is a huge possibility. This 200-day moving average could be acting as a level of support. So we could be in store for a bounce. Look at the oscillators and the Williams percentage, like it is ready to turn back up. And CCI looks like it's almost ready to turn back up as well. So there is some food for thought. Hopefully this is some technical analysis that you can use to pair with your trading strategies as we continue to trade throughout the rest of this week and this month. So it is where places to make money on the way up and on the way down as well. All right, folks, until next time, this is Tim Davis signing off. Enjoy the rest of your week, and hopefully I might be back this weekend with an update.